I always love one of our own who is out there successfully investing and is willing to share what they've been doing. So Edwin Rodriguez is a member of our Hudson Valley United Market Center. And Edwin, somebody asked me yesterday how long you've been with the Market Center, and I couldn't remember, but I said I thought it was about 10 years.
As long as Anna's been, because I was her first recruit. So
Oh, okay,
I think
yes.
whatever length of time that was, I think 6, 7 years. I'm not sure.
Um, no, so it's about 11 then. I
Oh,
think
yeah.
Anna is there 11 years now. So yeah, and so you were Anna's first recruit, and Edwin actually was really one of the few people over all the years who came to New City to interview me as the broker, and I loved that. And he had been a couple of years in another broker, and was working part time. He was working in Price Chopper, and he came and he told me his story, and he told me what he wanted to do, and get out of that other line of work and get into real estate and get into investing. And when he walked out that day, I called up Anna and I said, this guy is a natural. He is going to do so well with Keller Williams and us, and he has. So he has now been an agent with us for all these years and has gone on to within a couple of years, I think you left your other job, right?
Yes.
Yeah, so you went full time. And how long now have you been investing?
I would probably say around 2 years, 2.5 years.
Okay. And so how did you get started, moving from being an agent to now being a principal investor?
Well, ultimately, you start as a real estate agent, you start meeting other investors and things of that nature. So my partner, he's a contractor. And then we just ultimately just joined forces from him obviously doing the construction work and I do the sales and marketing and finding of properties. And that's ultimately how I got started.
So were you as an agent, were you very targeted in terms of being focused on who you were wanting to do business with? Did you seek out investors? Did you seek out contractors, or was this just something that happened in sort of the natural flow?
Well, this relationship happened in a natural flow. We just became friends and we're friends now, even though we're not partners now. We're friends now, 15 plus years.
Okay. And so the first transactions that you did together, what was that? Was it a flip?
It was a flip. So ultimately, he had more of the financial and he allowed me to ultimately join forces with him with whatever I had to invest. And then my profits was just a percentage of whatever my contribution was. And that's ultimately how I started building the capital. And obviously also through real estate sales, it allowed, doing enough high volume in sales allowed me to obviously invest in real estate.
Yes, I should say that Edwin had in his tenure in the market in as an agent on the agent side of it has become a top agent in that market center too. So he's been a capper for a long time, and definitely in our top 20%. So and as part of the capital and what you were putting into the deal, was some of it your commission?
No, no, that was all part of no, that was all part of the formula. My real estate, him and I had an understanding that my sales side of my business is completely separated. I wasn't commingling any monies. It's, whatever I make is what I make on those
Okay.
sales. Because he would have had to pay an agent, whether it was me or whether it was another
Right.
agent.
So I do know some people who are in the business, and in lieu of actually putting additional capital in
So
to
like,
get into the
maybe we're
deal.
not doing something else, but we did.
Uh-oh, Rita, mute them out. Um, Instead of putting in additional capital, they will put in their commission. So let's say your commission is $10,000 and your partner is putting up 90,000, you would then have a 10% stake in the deal. So that's another structure I know that people have used over the years to get into deals. And it's a nice creative way to use your commission, to get into these deals. So, but you did not do that. So initially you were a partial money partner of some percentage and he was. And how did you start finding the places that you were going to flip?
Well, the properties that he and I flipped were either MLS deals or HubZoo auction sites and things of that nature. At the very beginning, now I ultimately most of my properties were MLS deals or wholesalers.
They're MLS deals or wholesales? Is that what you said?
Correct.
Okay. So for the people who are not on the call, wholesale, so you're the wholesaler or you're buying from wholesaler.
I'm buying from wholesalers.
Okay. So wholesalers, for people who are on the call that I do not know, are people who get off market properties, get them under contract, and then usually they never close on them. They flip them as a contract vendee for some initial amount. So, they might be paying 100,000 and they might flip the contract itself to somebody for 115,000. How are you going about finding the wholesalers that you're dealing with?
Just through networking, honestly, relationship building, whether one of my clients introduced me to a wholesaler and I became part of their list. And so when they have a new property, they ultimately blast it out. I see it, analyze it, and then obviously negotiate a deal.
Right. And a lot of times wholesalers, if you need to find them, if you see the signs out on the street that say like we buy houses, those guys are usually wholesalers. So
Yeah.
they will go into the contract, they will actually not close it, and then they'll just flip the deal. So is when you start looking for your deals, are there any specific metrics that you're looking for in the deal? How are you analyzing it?
Obviously, it all starts with the ARV, determining the after repair value of the property. Then we're analyzing the marketability of the property. Is it in a good location? Is it, and then we also look at the extent of the work. If we're going to invest 70,000, but we're going to only make 20 on the profit, then it may not be worth the investment. And then obviously the acquisition cost of it as well to make sure that, I can sustain the cost of acquiring the property and then rehabbing the property.
Right. So at the end of the day, what type of cash on cash return do you look for?
All depends, honestly. Again, depends on the level of work. So typically if I'm investing $40,000 into a project, my partner and I would like to see at least, 50 plus on the profit. So we're not going to invest 40 to make 10. So it all depends on the extent of the work. If it's a quick flip and we just have to invest 10, 15,000 and make a quick third, no problem.
Okay. Um,
It's an extent gut rehab, 2.5 times well, 1.5 times the rehab cost.
okay. So the return that you're looking for cash on cash is approximately, for a $50,000 number is approximately a 2-time multiplier. And
I would
then,
say so.
yes.
Yeah, I would say that.
Okay. And then, repeat the last one that you just said.
No, like I said, I was just saying if I'm investing like 40,000, I would like to make at least what I invested in, if not 1.5 times what I invested in, to determine whether it's worth the time.
Okay. All right. And I was just looking, I was going to bring up, but of course it somehow disappeared off my screen. So I have, and we will share out a spreadsheet, which is actually Brett Tanner's spreadsheet, and I know Edwin told me he has something similar, which lets you analyze a deal, putting in, the acquisition price, what the rehab cost is going to be.
Mhm.
I saw Christine Spitali put in carrying costs. So the nice thing about this is Brett Tanner from KW Wealth, he has shared with me, and he does over 400 flips a year, that his average other costs, which includes brokerage on the sales side. He does do purchase acquisition costs separately, but it would be your brokerage on the selling side, your carrying costs, your insurance, all of those other type soft costs at about 9.5%. So I think, Edwin, you were going to look at your numbers. Did your numbers come out close to that?
Yeah, my numbers came out around between 7 and 8%.
Okay. All right. Yeah. And I would say Brett is a pretty conservative guy. So, and he likes to see, high ROI. So he really tries to make sure that he's figuring in a lot. So he buys the properties right. Um, and so so if you're putting 40 or 50,000 in, I mean, obviously what is the average purchase price of something that you're buying?
Anywhere between 150 and 170.
Okay. And what type of ARV? So Edwin said before, for those of you who are not familiar with that term, after repair value. So we always look at the acquisition cost, and then we look at the after repair value. So what type of, on a 175, let's say, what type of after repair value normally would you say you have? I mean, I understand it's all gonna maybe be different because of how much repairs you have.
Well, typically, I'm using a real life example. There's a property in Middletown that my partner and I purchased. We purchased it for 170. And the after repair, we sold it for 350.
Okay. And
So that's typically
how much repair was in that? How much
we put in, I believe, roughly 60,000, I believe.
Okay. So that was a big win.
Yeah, it was a great win, great smooth sale.
So tell me, have you had losses?
Yes, I've had
Okay.
a loss where I purchased and this was, I have, the property was actually supposed to be one of our most profitable property,
Uh-oh.
and it
So
ended up
tell us,
turning
I
into
want
a
to hear, now
loss.
I want to hear the story.
Okay. So we purchased a property for 140 in Newburgh. Um, we probably put 75,000 into it, but
Mhm.
unfortunately, between stop work orders, licensed electrician, licensed plumber, ultimately the lesson for that was pull permits. Do not try to, especially where areas where they require they're licensed people.
Mhm.
Then so between carrying costs, because the building inspector took, 7 years to approve the permits and things of that nature, it just pretty much took us into the negative. And I believe I lost around $18,000 on that property.
Wow.
Ultimately became a write-off. Obviously, it became a write-off, and there's other great creative ways to make that into a positive, but on paper, it definitely was a loss.
Yeah. Yeah, I mean, listen, the one thing you have to know is real estate is a risky business. And I think, we try to be smart about it, and we try to minimize our risk. But at the end of the day, you know, when any type of investment that you're doing, you know, could always go wrong. So you just have to know, you know, what is your exit plan, and you have to know that, okay, I can absorb this loss, you know, if it happens. But again, you know, it was interesting because there was an article in the Wall Street Journal today about the stock market, and it said, like, if you had put $1,000 in for your kids, in, I don't know what year it was, 1998 or something, and it was there 18 years later, you know, you'd only have $785. So, you know, every investment, you know, unless you're buying bonds, or putting it in a 3% savings account, you know, it has a risk factor involved in it. And I think one of the things that you're talking about there with that loss that's really important in flipping, I know, is the time factor. Time and the time that you take to flip it can really make the difference between profit and loss. And I think
Absolutely.
you would agree that I'm sure you have all your stuff lined up when you're gonna close, and you know your timetable.
Yeah.
So on an average flip, what type of a timetable do you normally shoot for to be able to rehab and get it back on the market and sell it again?
Ultimately, we try to, from point of acquisition to point of selling to the end buyer, we try to keep it within 4 to 5 months. So whether it take us around 30 to 60 days to renovate, depending on the extent of it, to putting it on the market and getting the end buyer and going through the mortgage process. Some took us 30, some took us 2 weeks. Some we were able to just buy it and put it right back in the market as is, just because we bought it at a right price.
Yeah, that those are nice ones, right? When you don't have to do a lot of work and you can just flip right back out of it. So those are probably far and few between, though.
Definitely.
Yeah, it's probably more likely the ones that you have to do a lot of work, that are much more readily available. And so now, like, in 2023, how many flips will you do?
Uh, this year, I think we've have around five to six in the books, and that's including wholesale deals that we flip with the contracts that we've sold, as well as obviously rehab properties and properties we sold as is.
Okay, so you are doing the side where you're able to acquire properties and wholesale them out too.
Yes, absolutely.
So where are you finding those properties? Because normally those properties you can't really find on the MLS. You're not finding them, you know, at a low enough number.
Well, one of the properties came from networking, where somebody knew somebody. They wanted to get rid of the property. We struck a deal with them. Was able to determine that we can just put it right back on the, put it on the market and, flip the contract. And we were able to, make $150,000 profit on it.
That's great. That's really great.
And then
And
another one,
so I'm assuming that somebody had some type of circumstance that they really needed to get out of that property if they were willing to sell it that far below market value.
they just wanted to, yeah, it was a property they inherited, and they did not want to deal with putting it on the market. They did not want to deal with agents. They did not want to, deal with speaking with multiple buyers and things of that nature. So they ultimately, you know, just, was willing to strike a deal with us. We told them we buy it as is, leave the material, leave the stuff in the house. They don't have to worry about anything. And that was of value to them.
Right.
And then we just struck a deal, and we were able to flip it to another cash buyer.
So see, you have a great mindset because a lot of people go into it and say, well, why would somebody take 150,000 less than market value? And The thing of it is that people have different circumstances, and the estate one is a big one for flippers because a lot of people who inherit homes don't want to deal with them, don't want to show them, don't have the time, don't want to clean them up, you know. And I'm assuming that pretty much every place that you go to, do you look at it and say, oh, is this an investment?
Yeah, yeah. Me and my partner, anytime we're driving around, we literally look at property and say, "Oh, we can flip that one. We should reach out to them. We should. Oh, that'll be an easy flip." We're always analyzing deals, even from the car.
That's great. So, and what do? You just go home and you just look up the name and the who owns it and get their number on the white pages and call them, right?
Grace, I know one of our other assignments actually came from us advertising on Facebook. And we established a relationship. It was a great relationship. She was happy, you know, able to assign the contract to an end investor, and then they're right now renovating the property, and they're going to make a profit. You
Awesome.
know, different modes. I mean, we send postcards out, but right now it's been word of mouth and social media.
Well, so the types of postcards that you send out, are those like the We Buy Houses type postcards?
Essentially, yeah, essentially. You know,
Mm.
that we pretty much add everything on there so they feel like it's an actual human at the other end and not just they're another person on the list. So we try to take a different approach. We're very transparent with the sellers. You know, there's occasions that we tell the seller, "Hey, you'll do better on the market. You're not in any kind of situation. You know, we're not people to take advantage of. People that we know that they can do better on the market and they have the time to do it. So we advise them that way as well.
So you're always disclosing that you're a real estate agent, correct?
Correct. Correct.
Thank you, Edwin. Love you. You know,
Yeah.
my compliant Lori's over there. She loves you too.
Actually, Edwin called me, when he started getting into this, and we had a long conversation about some scripts he could use, how he could present himself, and Edwin's always super diligent about compliance, and I so appreciate that. So
Thank you,
Of course.
Edwin. So tell me, how do you finance if you guys are putting $40,000 to $50,000 in and you're buying, $170,000 property? You need more money. So now you said you didn't have the money yourself, your partner didn't have the money. So where do you get the money?
Well, we leverage hard money lenders.
Okay.
So the relationship I have with one of my hard money lenders, the company's name is Kiavi. They
How do you
fund
spell that, Edwin?
KIAVI.
Okay.
Okay, and they fund 90% of the purchase price and 100% of the rehab. So ultimately, all I have to come out of pocket is 10% down and closing cost,
Okay.
which is tight and things
And
of
for
that
that,
nature.
and for that money, you pay points up front.
Yes, so right now it's 2.5 points. They're at a 12% interest rate right now. So once you close on it, then you're making an interest only payment every month.
Mhm.
Until you sell the property. So that all gets calculated in my spreadsheet when analyzing a deal.
Okay. And I am gonna give a plug right here that if anybody is looking to do that, you can also contact me because we are doing lending, private lending, and we will do flip houses. So in New York, that's the only thing. We won't do hold houses in New York, but we'll do short-term flip houses in New York. So yeah. So, okay, that's where the financing comes from. So you only need 10% down. So hopefully to everybody on the call, it's starting to look like, okay, I could do this, because I think everybody sees, like the average purchase price in Rockland County is 600,000. The average purchase price is 400,000 in Orange County. If you look in areas, that maybe are the lower price point areas and you start out there are buyers for those houses and you can get into these, with something like a, 10% down. So don't be afraid of it. And we'll put out the resources. We're going to put out, we actually have I have a Google Drive now, that we will share out, to everybody who is on the wealth call. Rita, just make sure, however, we have to get the participant list here that we do, so that we can share that out. And then let's take some questions now on flips, and then we're going to talk to Edwin about one other topic too, for building wealth. So I know we have, I don't see my chat down here. Just go out of this, maybe I see the chat. Okay, so we got a bunch of questions. Let me go up. Okay, somebody said maybe it was covered, but what tools do you use to locate wholesale properties, and owners? So I think Edwin has said a bunch of stuff. You said you do things like postcards, networking. You have found wholesalers, and we said, like, just look for the signs of the people that say we buy houses. You know, those are the wholesalers. Any other ways?
And just I mean, advertise different ways. Like I have a website for my flipping business. My
What
partner
is that
created
website, Edwin, so people can look at it? Dream House
dreamhousebuyers.com.
Buyers?
Correct. You know, it's pretty much it's you know, there's companies out there that create the website, and that's ultimately who created this website. I believe I don't remember the name of the company. I think it's carrot.com created the website. So people, me and my partner had a wholesaler call us yesterday about a property 3.5 hours away, unfortunately. So it's not a deal that we can analyze, but you know, so they reached out to us and they found us through our website. You know, so just get your name out there and, you know, and start having conversations.
Do you pay for any advertising on the website? You know, any pay-per-click or SEO on it?
We did at the beginning. So right now it's organic. I mean, we're not getting a huge amount of traffic. My partner and I had a phase that we're going to start revamping our marketing and investing dollars into it. But right now it's happening organically.
Awesome. Okay, so Lori is asking, do you do any of the work yourself, or do you depend all on contractors for the work?
99% of it is contractors. The 1% is sometimes I control getting the materials just because, you know, there's from a design standpoint, you know, sometimes contractors are not necessarily the best at that. And then just controlling the monies, you know, so, you know, me and my partner just believe that we want to control the dollars. So not leaving it into the contractor's hand, because then you're overspending on materials that you shouldn't be. So, but other than getting materials, that's the only thing that we really do. Contractors do all the work.
Okay, great. Lori's asking, what organized networks do you belong to? So you talked about networking. Any organized networking, investor, you know, REI, any of those?
The only networking that me and my partner are part of are Facebook groups. Like there's one
Facebook
called the
groups?
BRRR group, BRRR. Yeah, Facebook group. That's really the only thing. Connections with, you know, one of my big investors, their wholesalers, and ultimately everything that I learned about hard money lending was through my investor client, who they purchase anywhere between 100 to 200 properties a year across, you know, 5 different states. So obviously I'm their listing agent for the Hudson Valley area. But I've learned from them, like they had a networking group. They actually have a networking event tonight at 6:30 at their New Rochelle office. You know, so groups like that, but nothing really formally a part of.
I mean, if you look on Facebook, like, or go to Meetup, there's always on Meetup, the app, there's tons of investor groups on there, and you usually can tie into a local one, you know, somewhere that will have investors. I know in Rockland County, actually, some of the agents in our office there used to run the local real estate investor groups. They used to have it out of our office. I don't know if that's still being done or not. But yeah, that Facebook, social media is a good place to connect. So Sash is asking, you assigned you assigned a contract to an actual buyer without having to purchase the property and resell it. Yes, that would be wholesaling.
Correct. Yeah, you have to have the right to assign the contract in the original sales contract, as well as I have my attorney make sure that we have the right to market the property to an end buyer.
Right.
Uh,
And Cindy is saying, as an agent, you must disclose that you're a wholesaler. Yes.
Of course.
Mm-hmm. Christine is asking, do you ever flip multifamily?
I haven't, but I wouldn't be opposed to it if it doesn't make sense to just hold it
Mm-hmm.
for the rental income.
Yeah. So actually, I have new messages beyond that because I want to get into something with that on you. Okay, Sash is asking, are there any effective skip trace systems? I don't know what that is. Do you know what that is, Eric? Edwin?
Ultimately, you know, to find phone numbers ultimately, where they're able to either look at an address and look up somebody's phone number or a relative's phone number to try to get a hold of them. There's different websites out there. You know how good they are. I have no clue.
Just like any that you've just asking, like any tried and true, because there are many out there, but some of them aren't really that effective in getting owner information for non-owner occupied properties.
Unfortunately, I don't have enough experience to kind of give you that confirmation. I haven't really effectively used one yet.
Okay, thank you.
No problem.
Okay, Cindy is asking, is there an Orange County investor group? Again, I would suggest Meetup or Facebook and type, do some searches for, Orange County, New York real estate
No, I'm
investing.
saying there is one.
Oh, there is. Oh, okay.
Yeah, they meet on Wednesday nights once a month. Yeah.
And where do they meet?
It's like different places, normally like a restaurant, bar type
Where did you find
situation.
out about that, Cindy?
I think originally on Facebook.
Okay. All right,
Yeah.
great. Minnie is asking, do you do list pendants?
If it makes sense. I mean, I'm assuming that list pendants is just pending suit, so whether it's a short sale or whether, it's a contractor has a lien on the property or tax liens. I mean, we're open to anything as long as we can get good title on it.
Right. Okay. And I think Minnie's asking what broker fee do you use? So if you're selling, you're just charging a regular broker fee, right?
Yeah.
So excuse me. So in other words, what I wanted to know is that when you are purchasing the property and if it's on the market already, do you include your broker's fee as part of the down payment? I think Rosemarie was asking you that before, but I didn't get to hear the whole thing.
So if they're offering a commission on a property we're acquiring,
Yes.
then again, I treat that as a whole separate entity. I collect that through my sales. I don't make it as part of the down payment.
So you do collect it then?
Do you have your
Right.
broker business and then you have your investor
Yep.
business, and you earn your money as a broker, and you invest your money as an investor?
Correct.
Okay. So you mentioned the BRRR group on Facebook, and that's BRRR. So let's talk a little bit about that, because that's a little bit beyond flipping. That's really more about holding. So what is that acronym, Edwin?
So it stands for buy, renovate, rent, refinance, and repeat.
Let me repeat that. Buy, renovate, refinance, and repeat.
No, it's buy, renovate, rent,
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 refinance, and repeat.
correct.
So tell us that strategy.
So ultimately, so if you get a good property that, let's say, well, I can give you a real life example. My partner and I purchased a mobile home on land, and we purchased it for $50,000. No work into it. We increased it. There's already a tenant in place. We increased the tenant's rent just to market value. And now we're going to go through the financing process. I purchased that property with my home equity line of credit. So I purchased it cash through that. And now we're going to refinance the property to get potentially 175,000 out of the equity of the house. Pay off my home
Wow, you
equity
have a
line of
mobile
credit.
home that's worth 175,000 that you can get out of it?
Yeah, on land. So it sits on
Okay.
1.2 acres. And we'll ultimately be profiting, $60,000 to $70,000 on the refi profit, which is just the difference between what I paid for it. We did a little bit of work to it, in reimbursing the rehab money that we spent into it, and then that money becomes essentially tax free, because in the eyes of the government, that's debt.
You didn't sell it. You
No,
just
we're
took
keeping it.
mortgage on it.
Correct. And then the tenant is paying for the mortgage, and there's still positive cash flow coming in out of it. Now you have all your money back that you invested into it to repeat the process and find another one.
This is an
And then just doing that allows you
strategy.
to
I
portfolio.
just want to go over the numbers again. So he bought a property for 50,000 that was cash flowing, okay, with a renter in it. He fixed it up a little bit. About how much did you spend in fix up?
Probably 15,000.
Okay, so you have about 65,000 into it. Okay, so of your own capital, you're able to refinance it out for 175,000. So really, if you pay yourself back your original capital, you have 110,000 now to invest, and you're still cash flow positive on that initial investment to pay off the $175,000 mortgage.
Correct.
That's a home run.
Absolutely. And then you're keeping the asset for the tenants paying for it. Yes, your cash flow, your passive income lessens when you pull out the mortgage, but essentially I look at once I successfully close on the loan, it's going to be a free property. Essentially, I paid off the home equity line of credit, so I can use that money again to purchase another property. Plus, we have the profit from the refi on the mobile home that's tax free. You don't have to pay anything because it's debt. It's debt on the property.
You didn't sell it, so you don't have to 1031 or do anything like that. You've multiplied from one asset to two. And, if you look at a formula, even if you're going to go into like another multifamily property or something where you're going to take on 70% leverage, you're going to take 110,000, you're now going to go into a $330,000 property, right? So now, even at a 6%, cap rate, you're now going to create another $18,000 probably, at least, in a year in income off of that new property. So, now you have your first property that is covered, and now you have your second property, where you're going to get a return on it, and it's going to be a bigger property.
Exactly.
Love that. So does anybody have any questions about that whole process? Buy, renovate, rent, refinance, and repeat. This was a bonus today. Edwin asked me if he could talk about this when we were talking the other day on the phone. And I said, absolutely. Because I see a lot of people that look like they just had a big aha on the screen.
I just got a little confused. I got lost when he was explaining. I'm so sorry. If you don't mind, you can just explain that part again. I apologize.
That's okay. So he bought a $50,000 property with his
Right.
own cash.
Mhm.
He took his own cash for 15,000 and he renovated it. He has a tenant in it, and it's cash flowing positive. He was able to refinance it now, and pull $175,000 out of it. And that tenant in that property still provides either break even or positive cash flow. And when you take the 175 And if he pays him back himself back the 65,000 that he originally put into it, so now he has nothing invested, okay, in either of these two properties. He can take 110,000 and invest it in another property, okay, and get the cash flow from that as well. So now he has two properties and he has nothing invested of his own money.
Exactly.
Okay.
Edwin, it's such a pleasure just listening to that. If you don't mind me asking, where did you find this great piece of property?
Again, he reached out to me through
Oh,
somehow. Honestly, I don't remember how he got my number, but he definitely reached out to me, and just through conversation, it took time to cultivate and have a conversation with him. Move because he's moved a little bit slow, and he ultimately just wanted to get rid of the property. He claimed the tenants were trouble tenants, but they really weren't. So I just a bad relationship between him and the tenants, and ultimately we were able to take it off his hands and have a great relationship with the tenant. The tenant's been
that's
there
what I
for
was going
20
to ask
plus
you.
years.
So the
You know, they've been
tenants,
there for,
go ahead.
and they were more than for the increase in rent.
You increased the rent?
Yes,
Oh, okay. Plus you renovated the property, so it deserves to be increased. Oh,
it wasn't
okay.
a big renovation. I fixed what needed to be fixed. Their bathroom, the floors. So they were happy that somebody was giving the property attention.
Oh, okay. And the tenant is on good standards.
Correct.
That's good. Thank you.
Welcome.
Yeah.
Okay, anybody with questions for Edwin? All right, Edwin, this was such a pleasure for me to have you on today. You have proved out what I said, which is you're going to be incredible in this industry. I really appreciate your sharing. Again, for anybody who's on here, we are going to share our KW Wealth. We have different tools now that are in a Google Drive, including your net worth. And there is a spreadsheet from Brett Tanner on there for flipping and figuring out your return on flipping. I hope everybody enjoyed this today and got some great information. So thanks everybody for being on, and thank you again, Edwin.
To find it,
Thank you.
Rosemarie, you said go to my Google Drive and I'll find the.
We're gonna be sending everybody on the call the link to the Google Drive.
Oh, okay, okay. Thank you. Thank you
All
very
right.
much, Edwin, and thank you very much, Rosemarie. I really,
Take care.
really appreciate this information.
Okay.